Good morning, traders and investors. Hope everyone had a lovely weekend. Thanks for tuning in here on this Monday, March 17th, 2025. Relatively quiet weekend, but we do have a good show for you today. Kind of waiting on Wednesday. We do have the Fed announcement, Fed rate decision on Wednesday this week. Also, Fed Chair Jay Powell will be speaking at a press conference shortly after that rate decision. Expectation is for no rate adjustment. Nvidia conference going on today, driving some price action in quantum stocks here this morning. That conference is going on all this week. We're going to give a nice little preview and talk about that. Probably Nvidia going to be driving the bus here again. Affirm, a story here this morning, shares down 10%, loss of fintech partnership to Klarna with Walmart. We're going to talk about a little bit about the VIX moving pretty volatility last week. It's a little bit of paradox there. The VIX moving volatility. China stocks, insurance stocks, and semis holding up well last week at the end of last week. Earnings wise here to start this week, kind of a quiet earnings day or two today, but we are going to get some more exciting earnings coming a little bit further down the road on this week. Quick economic preview for today. Retail sales at 8:30 a.m. and then at 10 a.m. the National Association of Home Builders Housing Market Index. Our guest today, Todd Gordon. He is founder and CEO of TradingAnalysis.com. Got a good show for you here this week, this day on Pre-Market Prep.
The volatility right now is really incredible.
Wow, look at that consolidation on the upper right chart.
You know what we've seen this earnings season? Some of these expected moves get even more violent. And this is why I have switched my strategy 10 years ago. And if you're chasing, you're in trouble.
Christian Fromhertz, how was your weekend, sir? How you doing today?
Always good, always good. Good morning, guys. Let's do a quick rundown of the markets. We'll start with international markets this morning. Hang Seng was up 0.75%. Shanghai was just down. There was some China news out over the weekend. They had some economics. That's how those markets are trading. The Nikkei bounced from last week, up almost 1%. And this morning, European stocks are slightly green. You got European stocks up 0.25%. The DAX is up right now 0.2 percentage point. Over in commodity land, crude this morning is up 1.4%. Nat gas futures are up, climbing 2.8% this morning. Let's get over to gold, which made a lot of headlines last week. Gold futures are tacking on a little bit more gains there. You can see that you've got a really nice breakout there in gold, up 0.4 percentage point. Close to highs, but I think that was made on Friday. Silver this morning. Let's bring up silver futures. Regular silver futures, which also had a decent week last week, giving back some gains, down about 0.4 percentage point this morning. Bonds this morning. We've got bonds up just 0.3 percentage point. So kind of quiet, I would say, for some of these markets. Bitcoin this morning. Oh, how could I forget copper, which was a big mover last week. Copper is up 0.8 percentage point, but similar to gold, has not taken out Friday's highs. And Bitcoin, we've got also that's recovering a little bit from the lows, down about 0.8 percentage point. You can see it's trying to carve out a low here just above its 200-day moving average. And then finally moving over to equity futures, a little bit stronger here this morning. When they opened up last night, Sunday night, they were down a little bit, but they've been climbing back. S&P futures almost back to unched for the overnight session. NASDAQ futures also are now positive, it looks like, just barely positive at this point. And then Russell futures finally are down 0.2 percentage point.
Thank you, sir. Appreciate that. Let's bring in Dennis Dick here. There he is. Dennis, how was your weekend?
Not too bad, not too bad. It was a fun weekend. Lots going on. No snow for once. So
Woo!
61 degrees up in Georgia
61.
Bay. I know, that's what it was yesterday at one point in time, and the melting snow is incredible. I have a 10-foot mountain still there. Went down to about 8 feet yesterday. It was really settling down there. So people trying to avoid flooding in that. Now we're kind of on a little bit of a hill, so we're okay. but definitely some other people with the snow, piled up feet and feet, and then you go to 61 degrees, just suddenly melty mess up here. So it's not pretty by any means, but nice to go outside. You could be in a t-shirt for a couple of hours. It's unbelievable. So
Get a little vitamin D on you.
I
It'll do
need
you
that. I
well.
haven't seen any. That's why I've been sick for 3 months. I haven't seen any vitamin D since like December when I went to Florida for a week. So that's been it. Happy St. Patrick's Day, everyone.
Woo!
We did wear our green today. Brentster has some green in the background here. Normally I do wear some green, but I didn't even think about it till about 20 minutes ago. I was like, oh, St. Patrick's Day just sneaks up on you there. So happy St. Patty's Day. Enjoy. Maybe drink some green beer later on. But what's going on in these markets?
Dennis, you were excited about Nvidia this week when we were doing the pre-show. You said something that you've been saying. Nvidia will continue to drive the bus here.
Yeah, Nvidia is driving the bus. I did buy it on the close again. Just that just simplistic trade of they're probably going to be talking a lot about it going into this week. Traders are excited, obviously, about the conference. It's going to start, and Jensen Huang is the keynote speaker there tomorrow at 1 p.m. So, keep that in mind. Nvidia is driving the bus here this morning, and the other chips are up substantially as well. We got Nvidia, AMD, and Intel all up over 1%. I did sell those extra Nvidia shares here just about 10 minutes ago before I started the show. I think when you're looking at Nvidia, it's had a pretty good 3-4 day run here. So we know these stocks typically run up into these events. And then sometimes there's a hangover after. I know, Christian, you have some thoughts here too, but just looking where Nvidia was just 4 days ago, hit down to 104. We're now 123 in the pre-market. So that's a quiet 18% rally, getting back almost half of the losses from February in 4 trading sessions. So I think if you're coming in and buying it now, maybe there's a day left here, but you could be a little bit late to the party. Christian Fromhertz, your thoughts?
Yeah, and yes, happy St. Patrick's Day. I forgot too, as I'm not wearing green either. So I still have time.
I'm red.
I may be changing that later. I may be going out for
wardrobe change.
Some green beer later, but back to Nvidia, and I actually have a chart here of Nvidia versus its group SMH. You could see it's been outperforming. So you mentioned driving the bus. I agree. And one of the traditions on Wall Street, like no other, is buy the rumor, sell the news. We've got the buy the rumor going on pretty decently now. That's a big question. I think that's one of the big events this week is this conference. And I think there's a question mark of what they're going to be announcing. The last couple chips that they've announced, there's been a delay. So what are they going to announce this week? Are they going to have a catalyst to avoid the sell the news? Because I think we talked a little bit about this last week, but if you look at the last 2 events, and I'm throwing in earnings, but I'm throwing in also the last conference. This was the buy the rumor for their last conference was back towards the end of the year, and that was the big red candle here right around the breakout area. So I'm very wary of that trade, and you're capitalizing on it. That's a very smart thing to do. Even after it ran up on Friday, for you to say, hey, I'm going to buy the close again, and it's almost like you keep going to the well while it's working, because Nvidia is up again quite nicely. But yes, if they do not announce anything, or if it's not spectacular, and here was the big red candle on earnings, and because Jensen obviously speaks during earnings, he speaks at these events, but I would be very cognizant of that, and it may set up as a good short trade too. But you've got nice performance, and again, Nvidia was outperforming the group of semis. But if you look at this, this is going to be crucial for the semis group too, which did quite well last week. So I'm concerned that of the run into earnings. And Dennis, you also brought up a great point. Like, if you've been long Nvidia, what do you think you want to do going into that event?
Yeah, nervous to be long it for sure going into the event, because these have, like you said, sometimes they get excited. It's run up into the event here. C making a good point in the chat. He says, I was nervous about buying at 104, but I'm willing to pay 122. You know what? This is what trading is all about, folks.
Yeah.
I don't like to be buying stocks making new lows, but when they turn and you've got a little bit of strength and then you have a catalyst coming in, you absolutely can buy a stock at a higher price than it was last week. And this is where a lot of traders really struggle. They'll be like, well, I can't pay 122. I can't play the close 121 because this was 104 last week. Well, as a short-term trader, you can't worry. You've got momentum on your side now. So it's a completely different trade. I mean, it wasn't like it was tanking on Friday and there's going to be, people who are underwater. There's people who are chasing this thing now. So, I mean, I'm not saying I'm putting in my long-term portfolio. I haven't been in my long-term portfolio. I've had it in there for 2 years or a year and a half now. But, as a short-term trade, I liked my trade on Friday better than buying at the 104 dip. Sorry, see if you're trying to just point something out, but I'm saying it's a good point. I mean, so many traders, want to buy stocks when they're going straight down, Christian. I know you're kind of the same way too. When they're going straight down, you're kind of hands off because who knows where they're going. But once they start to turn and show you a little bit of life, that's where you look, right, Christian?
Yeah, absolutely. And plus when you've got that catalyst, I mean, that's the major thing. But this actually started to, if you just look at the overall market too, or let's look at Qs too. Let's, just to look at this chart. But you can see that the Qs obviously on Friday was a big rally day and a big green day. And a move finally above that 5-period moving average. But Nvidia was already started to make that turn. And much better outperformance. So yeah, absolutely. I think the first go of it was on Wednesday where you had the up move and it tried to rally on Tuesday, was rejected, but it really started to make that move on Wednesday and nice follow through throughout the week.
And just to be real deliberate here, it's called the Nvidia GTC conference. It is effectively their global AI conference. And just real quick, Dennis, just wanted to mention that it seems like at least we are getting some action in the quantum names. I think ahead of this conference, there is going to be a quantum panel on Thursday at the same time. Jensen Huang is going to be speaking 1 p.m. on Thursday. I have looking QUBT up about 20% here, QBTS up about 11%. But I know that's not our whole quantum watch list. There are a bunch of other stocks that you guys usually run through. I didn't personally run through those this morning, but a quick look at quantum here, guys.
Yeah, I think it's important too, and Christian, is bringing this up as well. They're going to talk quantum stocks there. And one thing to consider is that the last time he had a conference and last time Jensen Huang spoke was when he said quantum was like 15 years away and all the quantum stocks went down like 60, 70, 80%, basically in a couple of days after those comments. So I think Jensen Huang will probably be very cautious with talking negatively about the quantum stocks, because he probably doesn't want to do that to those stocks again. So he caused that to happen. He knows he caused that to happen. He's probably been advised to maybe take it easy on thoughts of like 15 years out. I wouldn't be surprised if he talks the stocks up a little bit and says, maybe there's, he's probably not going to do timelines again because I'm sure he's not going to change it. But maybe he says, very bright outlook if you've got a long-term look on quantum. And I mean, if he says anything like that, and especially with stocks, the company speaking at the conference, I think there's a good possibility that he maybe does talk those stocks up a little bit. But with that said, I mean, again, to Christian's point, you get these events and they run up into these events, and we're definitely seeing, the quantum stocks lift here this morning, IONQ, which is one of the lower beta ones, up 4% here this morning. QBTS up 16%. RGTI is another one. It's trading up 3% only, but it's come back quite a bit. QTUM, if you want the ETF. We can look at that one too. And then there's a couple other ones there too. I've already forgot the names of them.
Yeah, I think this QSI, that's another one. But yeah, I mean, here, this is a dollar stock. This is a penny stock. But yeah, I mean, look at this move in QUBT, QUBT, right? Sorry, I'm getting the QUBT, or no, the other one is QBTS. Sorry, I'm getting these confused. But this also had earnings too last week. But I just, it's astounding. And if you caught this, congratulations to you, because the stock running like, I don't know, 30% from where it opened. I mean, $7.50 to $10, and very interesting. This particular one, which these all fell on that comment that you pointed out, a couple months back. From this was $10, it went all the way down to $4, and I remember that day that you said, "Hey, I think that this is too much," and I think you bought
I call bottom on that one.
Yeah. So it's kind of just been hanging around in that range. But I mean, look at the volume that happened on Friday in the QBTS,
Look
and
at the
yeah,
volume this morning.
yeah,
14
Right.
million shares have already traded this morning. It's up another 14%. I mean, yeah, we have to have perspective here, Christian. $4.57 4 trading sessions ago. It's 11. The stock just went up 200% in 4 days. I don't like chasing stocks that went up 200% in 4 days. That is a big move, folks. So, I mean, and then you're getting back. You can look at some highs, 1141 in December. I mean, this is like getting all of those losses back just like that in a snap of a finger. So I think I'm with you, Christian. I'd probably ring the register into this as opposed to sitting around and thinking, Jensen Wong is going to be like, tooting the horn here and there's going to keep running. Maybe some of that's already priced in here.
definitely. I mean, and yeah, this stock takes out those highs. I do have a level. I see overhead supply here right around 1180, which is where the stock has stopped this morning. But that's above those previous highs from last year. I mean, that's pretty amazing. And I think QUBT that reports earnings. What is it? Sorry, I'm having problems with symbols this morning, especially the quantum symbols. But
Yeah, QUBT, yeah.
yeah, that reports earnings this week, I believe.
Okay.
That's on the 20th. So you also have another catalyst there. But
There you go.
yeah, I mean, once again, buy the rumor and possibly sell the news. Again, I'm not going to officially say sell the news because nothing is a guarantee, but I think that's a great trade to be thinking about. And again, it's all about the run up when there's an event. These names, not in just in particular the quantum names, but just in general, when you have an event. I remember years ago, it used to be the same thing with Apple. When Apple would have their developer conference, or when they were announcing, hey, they have an event to introduce a new product, it was the same type of thing. When you got closer to the event, the stock would rally into it. And then it was really dependent on what they were going to say in that event. But most of the time it was the stock would sell off once the actual event happened.
Buy on rumor, sell on news has been a trading strategy since the beginning of the stock market, and that's what you're seeing here is definitely some people getting excited buying on the rumor that, maybe Jensen Wong is going to say something cool about quantum. Maybe there's going to be, something else being revealed because some of these companies are speaking. So that's been, a core strategy for a long time. So I wouldn't be married to these stocks going to this conference. I just want to continue the macro theme here for a second too. C's all over this morning. And, something that we were talking about on the pre-market show is I think you have a window here right now where stock can actually rally for the next, week. But don't get married to any of these positions because he is absolutely correct with what I just put on the screen. I'll just read his message there. Everyone is focusing on the conference, but nobody's focusing on April the 2nd, which is a day of reckoning. And you know what April the 2nd is? Maybe some people don't. It's reciprocal tariff day, where Trump has talked about adding these reciprocal tariffs. And Trump has not backed down from what he was doing. He obviously has kicked the can down the road and delayed things before, and that's always a possibility. But we know how big he is on tariffs. So I think what I kind of envision for the overall markets here, putting quantum and stuff aside, that stuff's going to move around, on individual conference news here. But overall market thoughts are we've had a good relief rally. We've had a dead cat bounce is what you would call it. We were oversold. We've popped a bit. I think there's a window where we could get up to 570, maybe 575 even on the SPY. But I wouldn't get married to any of these positions because I do think when we start approaching that April 2nd date, if there isn't, some deal or something like that to be had, which there always can be a deal. I mean, it's about the art of the deal. That if those reciprocal tariffs go in, the market will start getting very nervous as we start approaching those dates. So you've basically got 2 weeks before that April 2nd, where there may be a window where maybe there's some buying opportunities, maybe you're buying some dip. But I think if those reciprocal tariffs go in, it would not surprise me if this market makes new lows in April. So I'd be very cautious getting married to any of these positions. I think it's still a trader's market.
I think so too, and you also kind of have to think about another factor that I tend to look at is seasonality. Seasonality is, we know that the second half of March is strong. Usually April's strong too, but I would, for now, I think it's a good, we have that type of events that we know that's on the calendar. But I think, markets can rally. I think we've got quadruple witching this week. I think it also will be interesting what Mr. Jay Powell says on Wednesday too. Right now, I just want to look at Fed Fund futures to see
Sure.
what the market is pricing in terms of the probability. It's been slipping a little bit for, again, we're not expecting anything for Wednesday. There's like less than a % chance that the Fed does anything on Wednesday. That's not really going to be in focus. What's going to be in focus is the possibility of what they're looking at in terms of the possibility of cuts going forward. 28% chance right now for the May 7th meeting is what Fed Fund futures are pricing in. 60% is what they're pricing in for June for the probability of an interest rate cut. But I think that if you kind of think a little bit about a scenario analysis of what Powell might say, and I know, sorry, I'm previewing this a little bit, but
No,
I'm
it's good.
interested in this. And is he going to say that we still need to wait and see a little bit in terms of, we just gotten some inflation data last week that shows that inflation's coming down, but he may want to see some more reports that continues to see the trajectory of inflation, as well as maybe what the tariff impact. So he's going to get a lot of questions about that. That press conference that starts at 2:30 on Wednesday is going to be very interesting.
I mean, Fed speak is going to, drive the bus here as well. So, and maybe even the talk, where Nvidia conference, you're just getting the dates where you're getting excited about these tech stocks moving up into the conference, maybe a little hangover. And then I really believe that Powell is going to continue to say some of the same stuff he's been saying, where, they don't know the effects of tariffs on inflation. There's a lot of unknowns here. And that's why I don't think he gets all excited saying, yeah, we got imminent interest rate cuts coming for you guys soon. I don't think, and when you were pricing out the Fed funds futures, you were looking at that, probability going down, Christian. So I think we're still in that camp where if I'm sitting as a Fed and you're seeing all this tariff stuff and what about everything else too? I mean, going on, we just don't know how any of this is going to impact. The fiscal policy obviously is going to be a little more constrained. Maybe that's a catalyst for them to think about cutting rates but there's so many unknowns here. I think it's just going to take more time before the Fed's going to be, starting to tip their hand.
Want
Next
to
week.
keep going?
Go ahead, Brent.
Go ahead, Christian.
No, you got it. Go ahead.
Just wanted to give a quick preview here. About 7 or 8 minutes, we are going to be getting some retail sales data at 8:30 a.m. I don't know that we're exactly going to be like breaking in with that news, but I did want to give a heads up just in case anybody has any positions on it. It is the reading.
So I like to know.
Dennis, you. I'm always saying it to you, Dennis. It is the reading for retail sales for February. So a bit of lagging data here, but just keep that in mind. You'll be getting that in about the next 7 minutes. Let's keep going with a couple news items here. A big mover from this morning, Affirm, that's ticker AFRM. Shares were down about 9% at last check. So Walmart had a fintech partnership with Affirm, and Affirm is going to be losing that contract to a potentially IPOing name here, Klarna. Again, Affirm shares trading down about 9% or so here this morning. Dennis, did you have any interest in this news item today?
Yeah, actually I did. And, sometimes you just get lucky. I just so happened to be short Affirm coming in here. I had it on. I was long Nvidia and short Affirm because I was short a bunch of other, I was long in some tech names like Nvidia because of the conference there. But when you do that, you like to offset it with some beta too. And I was like, Affirm's not a bad one that moves the other way. So I just so happened to be short Affirm. And then you get this windfall. I mean, sometimes the stuff just works in your favor. It's not like, ooh, that was a great call, Dennis. I got lucky. It probably could have been down maybe a little bit today with the overall market. But, when you pick up 5 points, and I've covered it already. I covered at 44.90 about an hour ago. So on the headline, because obviously, that moves down. It's a windfall. I think you do find support down here too. I think you find it in the 44 to 45. So when you get something, here's a good lesson too. When you get something that moves in your favor, don't just get all excited. Kind of take a look at the levels and say, hey, where is this thing likely to bounce? And you look at the chart. Well, the March low is 44.16. We just came out of that. So now we're coming right back down into that. So anybody who missed it probably is going to be saying, hey, this is my chance to, buy it. And anybody who's short it, like myself, would probably be like, this is my chance to cover. So I think it was predictable you get some 44 to 45 buying. That's what I did. It's already up at 45.74. I don't know if it bounces at all back today. It's not a great headline whatsoever. But I don't know if it's going to be like, boom, 44, 42, 40. I don't know if it's going to be hit like that here. And I think there's a appetite for some of the higher beta names too. So it wouldn't surprise me if you find some buyers in the 44s.
Yeah, from a technical standpoint, that's, I have support of 43.15. That's one of these blue lines on my charts are what's called virgin point of controls. It's where a lot of volume has previously been. So we're bouncing off that level. But interesting, the stock really, and it's also has some support of its 200-day moving average, right around this 46, 47 level. But it hasn't shown that like really nice strength. Leading into last week, I think it's been a bit of an underperformer. Also Upstart, which has nothing to do with that news headline too, but if you look at Upstart too, like Upstart barely bounced. Whenever we have a sell-off like we've had, I always will begin to try to look for the names that are moving up ahead. Like obviously Nvidia was one of those names last week that was showing relative strength, was starting to move ahead of the overall market. But it is very important when you're going through names that a lot of growth names, especially, had all been beaten up. Which names are starting to come back, or which names held in there a little bit better than the overall market and started to kind of reveal themselves going up before Friday. Because I think those observations that you'll as you go through stocks, you're going to find that those names are just outright stronger, and those names, once the market does continue to climb, you'll find that those names will continue to outperform. So very important. But Affirm, Upstart, they were not showing strength at the end of last week.
Dennis, did you see this question here from Eric?
Yeah. Why did I choose Affirm? Okay.
Yep.
I'm
that's
just
a good
randomly
question,
grabbing
Eric.
names. It's not like I was only short Affirm. I randomly had some semi names, that I was buying, and some other chip names because they were reporting this week. Micron was another one as well. Sometimes you just got to say, hey, you can short it with the Qs. With the Qs, are made up of a lot of different things. Sometimes you just grab some other names. So, I mean, it might have been, and sometimes you're just making rash decisions. It might just be Affirm. I got a decent price in the after hour session. It's going back to Friday. I can't exactly remember. But it also is the fact that I'm like, okay, I got a little bit too much beta right now. I need to offset it with some beta. So, I mean, what I try to do in my trading portfolio, especially going into a weekend, sometimes I'll be biased, but a lot of times there's an unknown. Like, I don't know, Trump might say something. So I don't want to be long a whole pile of Nvidia and then not have, just flat out long. And then Trump says something, I get trumped and I get a Trump dump on me and lose a lot of money. So I'm looking to offset it with other tech names that would probably, be correlated to a certain extent. So, Affirm might have been my pick of choice, but I was short other names too. Like I was short Roku, there's other names in there. So it's all just, a matter of preference at that point. But going back to my like market neutral stuff, when I go into a weekend, a lot of times I trade market neutral, period. If I've got a feel, I might bias it one way, be long a little bit, short a little bit. But in a lot of cases, I'm trying to find like hedges that I feel like, if we get a Trump dump, imagine Nvidia is down 2%, Affirm's probably going to be down 2 or 3% as well if a Trump dump was to happen. This wasn't, so I just got lucky. Sometimes you get lucky. Sometimes I get unlucky too. Sometimes you're in something that's got good news, stock gets upgraded, like I could have been short Netflix, I wasn't, but Netflix gets upgraded today, that would have been a bad choice. So there's a lot of luck factor day-to-day trading. But overall, if you're looking, at extracting alpha from a run up into an event, I mean, overall, those strategies usually make money by hedging out the market risk to a certain extent.
Want to do one more quick news item here that was in a space that we've been talking about maybe a couple weeks ago. And then at 8:35 a.m., we're going to be getting Todd Gordon on. He'll be having some good commentary on the macro. Maybe he'll give us a couple picks here. Norwegian Cruise, NCLH, getting an upgrade from a big bank here this morning. JP Morgan, they did upgrade it to their equivalent of buy. Did you guys have this one on your radar this morning? Christian, did you like this upgrade? Did you dislike this upgrade?
Yeah, I think I've been noticing that there's a lot of relative weakness in the anything consumer discretionary. So I think bounces probably could be sold a little bit. I think the cruises have been standing out in terms of a little bit better in that group. I'm just going to mention that we've got retail sales here coming out in about 5 seconds. So they're looking for 0.6 month over month is what the expectations
Okay.
X auto 0.3. It looks like
Looks like
retail sales
worse.
advance
Ooh.
month over month coming in light,
Yeah.
0.2 versus 0.6. When you strip out the X auto month over month, you get 0.3, which is in line with estimates.
What's
Any
interesting is we rally
reaction?
on that.
Yeah.
It comes in light and we rally on it because, Fed speak this week. Maybe this is another data point that could, get us excited about the possibility, even though if it's remote, of like talking a little bit about, cutting rates. So it's interesting that the market, sees light retail sales and rallies on it. This is the kind of market we're in right now.
Well, should we bring in? It looks like Todd. Todd might be ready there in the background. You
Todd's
guys mind
ready.
bringing
Just
him
thumbs
in?
up, Todd. If he's ready, we can bring him in early. I love Todd.
I think he looked, and I think he gave. I think he gave a ready there. Here we go. Todd Gordon, how is your morning going? How was your weekend?
Good. Good morning, guys. Happy Monday. How are you?
Hanging in there.
Oh my God. We had a 3-day kids ski race at our local mountain, man. I haven't done this much manual labor in decades. Like, we busted our butts this weekend. There's a lot that goes into it. I'm good though, other than that.
So where are you right now?
So we're in Saratoga, right down the road from Christian, and yeah, just ready to go. As I said, end of year, kind of getting ready to wind down ski race season. I coach at our local mountain and keeping up with these markets. Dennis, I was just in, I did a 2-week ski trip. This is like my time to this is like my summer break. We wound up skiing in British Columbia and up in BC, which was just unbelievable. Yep. I cut off so many conversations about, hey, what are you guys thinking about tariffs down there in America? I'm like, I don't want to go there.
Don't want to go there. Don't want to talk about that. Yeah. Canada's not a fan of the tariffs. We'll just say that in short.
Yeah. I gather that. But yeah, anyways, no, thanks for having me, guys. Good morning.
Awesome. So let's just talk, a little macro off the bat here, because obviously, the tariffs have spooked the overall market. Trump's calmed down the last couple of days. We had some talks where Doug Ford came out a couple days last week, I think it was Thursday night, and saying productive talks, looking like, and then nothing crazy over the weekend, nothing like, earth shattering that we're like, oh, here we go again. But the market's had this, pop here now. So what's your overall thoughts here? What's your macro outlook here?
So the macro outlook, I'm kind of pleading and saying, here, go easy on me. I was gone for 2 weeks on a ski trip and really just trying to unplug, coming back into chaos last week, like just trying to figure out, which way is up. And I'm still doing that. I've never had such a hard time getting back in the market flow after being away. And I think that's just symptomatic of the kind of market we're in. Like, and I'm asking you is, do you feel like which way is up right now?
I don't know. I already love Todd. He comes on the show and he asks a question. He interviews us. Like, he's the only guest that comes on and he'll actually start interviewing us too, which is so nice of him here too. I mean, head on a swivel.
I'm in a room of highly competent professional traders. I mean, you gotta, media training, you've got to know the room, right? You got to know where you're, where the interview is.
I think what you're saying, and this is exactly the feel, is like day-to-day random walk here. This is kind of the market that we're in. We don't know what the next headline's going to be. We don't know. We know it is driven by Trump, and everybody's glued to every time he's speaking, which he speaks every day, it seems like. So, I mean, it's all, dependent on what Trump's going to say next. So I think we're at this point where you're right. We don't know which way is up or which way, the market's going to go. We can get a feel for maybe on short-term day trades, but you want to ask me where this market is 2 days from now? I have no idea.
Right. And I like to take this big step back. And as I said, re-entering after being away from the market is, it's a process for me. I always start big picture and then drill down and get the feeling day to day, how markets react, like retail sales, but my big picture thought is like, okay, let's figure out what is the import export dollar volume of Canada into US and US into Canada, as well as Mexico. And these are the numbers that I came up with in 2024, and stop me if you guys have already talked about this. This is not helpful or new to you, but 2024, there's 412 billion imported from Canada and 505 billion from Mexico. So altogether, you're 917 billion, which I get to be, 127th the size of the American economy. And this is the total import, money that is imported from Canada. Exported to Canada is 350 billion and 330 billion to Mexico. So you're talking 700 billion as a percent of $27 trillion economy. And we're blowing up the entire market based on tariffs, a percent of transactional cost to ship on that number. Like, yeah, I understand the implications and the knock-on effects are huge. The uncertainty, yeah, he's trying to bring, these tariffs on to put himself in a better negotiating position. You never know what he's capable of, but the numbers I don't think warrant the degree of the sell-off. Now, was the market extremely overbought, rich valuation, and needed a pullback, and we were off 10%? Sure, but we're talking about 1.5% of the GDP of America, and it's disrupting the entire, most important second AI industrial revolution, as Jensen Wang said. I think context is needed. I have some support levels down in the market that I thought should hold. I have some index hedges on in, kind of our fast money accounts. I'm thinking about taking them off. I feel like the move may be overdone, and I'm entering the week with that, hesitant approach to say, maybe I'm going to start to take the hedges off.
You know what here, Todd, and it's an interesting point here. I just want to add on to what you're saying here just for a second here. It's interesting that you see the U.S. markets getting hit harder than Canada, getting hit harder than Mexico. Mexico's going up. Mexico, maybe it's because we had the deal, the potential, kick the can down the road short term. But it's such a good point you're making, is that it's okay, this tariffs, and I'm a Canadian, is way worse for Canada than it is for the US. Way worse. Right. But the Canadian markets are actually holding up quite well. I mean, you look at the EWC, and full disclosure,
EWW, and I'm watching dollar CAD exchange rate, and I'm watching dollar MEX exchange rate. They're great proxies for what the market is doing right now. And I'm sorry to interrupt them, just really echoing and I'm really reinforcing what you're saying. We watch EWW, EWC, dollar MEX, and dollar Canada every day. And dollar Canada do you watch the level? I think it's about 146 in dollar CAD, Dennis. Do you watch that long-term level?
Well, I'm always watching the Canadian dollar because it's I'm making US dollars because I primarily trade US stocks, and I'm always converting over. So I'm always watching for that reason.
But do you see the long ass triple top in dollar Canada about 140?
You share your charts, Todd?
Yeah. I'll pull them.
Yeah, let's bring it up. I don't know if if you can show your charts, we love your charts. Want to see that too?
Yeah, sure. There's it just take me a second here. There's a huge triple top on the monthly at 148-ish in dollar Canada. Let me do this. I'm doing the multiple desktop thing.
And that 150 is the biggest psychological level, of all time, because it was $1.50. I don't know, we're going back a decade ago. Maybe it was even more than that. But it was 150 for a long time. And then we had, the financial crisis, and we had the collapse of the US dollar against the Canadian dollar, and, went par and went out the other way here. I mean, even from a psychological perspective, even for Canadians, that $1.50 is a huge psychological level here. So as we obviously approach back up to there's gotta be some major resistance up there, I would think.
This is huge. I mean, this high was from 2016. We had the rally in dollar Canada, and listen, FX is not, a lot of Americans aren't comfortable with the concept. So we're looking at USD/Canada. So as the chart moves up, dollar strengthening, Canadian dollars weakening. So we went up to 2016 at $1.47. 2020, right around the COVID lows, we're at $1.46, and here we are again. I mean, this is going back, 9 years, triple top. This is a big deal right here, just from a very simple technical observation, right? The overall dollar is backing off. You look at the dollar index, it's backing off. But the Canadian dollar just won't give us confirmation that a triple top may be in place. You guys know, if a market comes back to a level a third or even a fourth time, usually they want to get it. And
Yeah.
I think the implications of breaking 148, man, that's really, really bad. And I really, really am voting for this triple top to succeed and see if we can start seeing 42, 40, 38. I feel like gun to head, that's where we're going to head. I mean, and there's a much, much deeper conversation in this against, dollar or Canadian dollar going against the dollar, but also against the yen. This is a market where, all four asset classes, fixed income, commodities, equities, commodities, currencies, you know what I'm saying? They're all moving. And the yen carry trade is also been a very good proxy from the FX market's point of view about where money is flowing. And I'm seeing this morning, like, look at all the non-dollar yen carry trades up. New Zealand yen, Swiss yen, sterling yen, CAD yen, Aussie yen. I used to trade for an FX hedge fund, so it's just in the back of my mind. So, as long as we're seeing selling of yen and we can see dollar Canada defend that 147 level, I think that's going to be a proxy that, we're not seeing flight to safety into the US dollar. I'd really like to see that level hold. So sorry to ramble on that.
That's great. And so question, Todd, if you think that, we've kind of gone down to the point of where it's an official correction, where everybody loves this 10% correction. A lot of other stocks have gone down more than 10%.
Yeah.
Value stocks have held up a bit better, so that kind of balances out the, what the S&P has done. If your thinking is that this is kind of, just a more traditional pullback, which we needed, because stocks did get pretty darn expensive, especially in the US, and there's been a rotation out of the US into some definitely into some international areas. As you start kind of looking at where we've come down to, one of the things that I look at is, we've seen a pretty decent unwinding of the AI trade and the growth trade and so forth. What are the areas that you think are now like prime, like buy the dip, if that's what your thinking is, unless you think it's more of a prolonged dip? But if you're in the camp that, hey, this is a good buying opportunity, even for for like long-term portfolio or even short-term, where do you think that the new leadership or there's areas that you think that could be just straight up buy the dip areas?
Yeah, it's I was doing a couple scans, I'll throw some fundamental scans in, I'd like to do this like this 2 for 20, what I call. So 20% growth over the last 2 quarters in EPS, 2% sales over the last 2 quarters greater than 20%, 2 years, 20% growth sales and in earnings, and then the projections going forward. And, there's earnings are spread across the variety of sectors and industries. It's not just tech and AI. Nvidia pops up in what I call this 2 for 20, and I'm happy to give you guys the criteria for it. Nvidia's in there. I'm just going off of memory. Actually, no, I have it written down. This is the scan, actually. I made some notes for you guys, but here's some of the names in here. And the way I'm going to answer that, Christian, is like it's across consumer discretionary. It's across tech. HIMS is still in there. So it's 20% greater of average EPS and sales over the last 2 quarters, last 2 years. In the coming 2 quarters, market cap greater than $1 billion, 50 above 200 day. So you get Palantir, Duolingo, DoorDash, HIMS, InnoData, which is a new company I'm watching, Nvidia on cloud, which I still think is eating Nike's lunch in terms of running, and Shopify. So it's like it's a variety of different groups. I mean, I think Nvidia above 100, 110 looks good. The stock is still growing, 70, 80% top and bottom line. The shock and awe is off. Nvidia continues to be there. We're moving into the software space. I don't know. I'm kind of dodging the question, Christian, specifically what leads us out. I just think we're in an era of persistently higher interest rates as inflation is now a reality, and that's going to separate out the companies that are able to manage their balance sheet and grow earnings. And it's across the variety of industries. I'm finding like I'm really liking being a stock picker in this market rather than saying I'm favoring consumer discretionary or tech or communications. Like Spotify, comms looks good. Netflix looks good. Apple's gotten beat up. Nvidia looks good. I think Google is continuing to, recover. Amazon looks good. Meta, you got to buy it. You can still buy large cap tech, but don't be afraid to move into those, $50 billion, $80 billion, $100 billion market cap companies that aren't super, super mega cap. So I don't know if that's helpful.
It is, and so what you're doing with that with the criteria that you're using, you're using some you're using, for example, like earnings growth. So you're using some fundamental criteria to say, and kind of letting the results kind of speak for themselves, and saying, hey, this is more of a higher quality look, to say it doesn't have to be like, oh, I'm going to go into this sector, but letting the names that have had strong earnings, good fundamentals, kind of be those picks for you. Is that correct?
Absolutely. I mean, and that's what I like about this market and running a portfolio at Inside Edge. Like the good fundamentals I'm finding are being rewarded because, again, we have interest rates that are no longer, ZERP is gone. You know, I don't know if we'll see it in our lifetime, our professional lifetime again. But, you know, it's really separating out the companies that are performing and the companies that are not. And that's why, you know, we can have a whole conversation on internals as I'm looking down, and I can show you the technical levels I'm looking at in the indexes, but I'm really focusing on the internals. I'm looking at advanced decline. I'm looking at put to call ratio. I'm looking at, you know, moving average of the NYSE tick, you know, the presence of institutional buy sell programs. Like I'm really trying to focus on where the averages are going, where, you know, where the support zone is. Is this just a 10 or 12% pullback before things stabilize? Trump has put us through enough of this adjustment period as he told us he was going to do. And then I guess the point is, it's pretty simple to go find the companies that are uptrending, showing good earnings growth and, you know, beat and raise quarters, leading, embracing AI, leading the respective industries. It's not that hard to find those stocks, but I think you've got to figure out the macro and figure out, is this 10% going to turn into 20% and Trump is really going to, in the first year, go off the rails, or if it's really just, you know, early goings and sort of settling into the position and reestablishing his authority, which we didn't have any in the last administration. So, you know, I'm just looking at rates and stop me if you want, if I'm not being helpful here. But like, okay, you look at the 10-2 curve, like we have a 2-year rate right around 4%. We're 90% chance of cutting in June. You know, I love that the 10-year yield didn't break below 4 and didn't attain a 3 handle. Like I want to see the 10-year yield going 4.25, 4.5. Like that's reflective, I think, of the current economy. And if you look at, you know, the 10-2 curve, we're still hanging at 25, 30 basis points of a normal shape curve. And you know what? I'm okay with the 10-year yield moving up a little higher. And let's stretch out the 10-2. Let's get out of yield curve inversion finally. I think gold moving up is a good thing. I think that's a vote that the dollar is heading lower. Rates, U.S. 10-year yields are.
I was just going to ask you that because you brought up currencies, which is nice to have that feel in terms of what some of those other currencies. But as a whole, the dollar going down is usually a pretty good thing for stocks, right?
Absolutely. And I'm kind of hesitant to go in this conversation again. I used to trade for an FX hedge fund. Dollar going down is good. This is the daily dollar. If dollar yen wants to go lower as well, okay. But if it pulls the rest of the non-dollar yen carries lower, that's when it sends a sign of global risk aversion. So you want the dollar to sell off, but it means I want to see the dollar selling off against Australian dollar going up, Canadian dollar going up, energy sensitive Norway coming up. It's a nuanced conversation, right? You want to see dollar down, but you want to see the global macro types putting on the yen carry trade. Aussie yen coming off the low. Aussie's a great proximity for China. CAD yen is a really nice carry trade you want to look at. We're doing a double bottom compared to the August sell-off. So watch those yen carry trades. You know, I think gold going up is good. Again, I think that says that the 10-year yield is under control below 4.5 or so. Dollar lower, as I said, with that nuanced conversation. Gold going up, I think, is good. Copper starting to move up a bit. I have them in commodities somewhere here. Copper's looking decent. Again, a really good proximity for China. Silver's acting good. So I think from the FX market perspective, one of the 4 major asset classes supportive of this pullback in the S&P. I think commodities are also starting to be supportive of a global risk-on picture, with all base industrial precious metals starting to act fairly strong. Bitcoin, you might lump them in there. It's up to you. You know, and I think, you know, just from a real gory Elliott wave point of view, and I was looking at this highlighted zone, a bunch of fib support from 56 down to 54. This is the anticipated zone. I've got a hedge on in our fast money accounts. I've got a 56.50, 55.50 SPX put spreads that expires in March, end of March. So we're just kind of hanging in there. This is the anticipated zone. So far, it's holding support. So if we start moving back above the November election lows, back above, I would maybe start to say that the coast is clear. I always like to look at fib retracements off of significant corrections. So 38%, 50, 618. Unfortunately, you can't say coast is clear from this little school of analysis until you break 786 and 6,000 in the S&P. But for now, guys, I think I want to take off the hedge and see if we can start to test some of these retracement levels. And then if we break here, then it's game on. I know that's a long ways away, but I mean, that's the best I have in 10 minutes to try to just handicap what I'm seeing.
It's great perspective, Todd. It's a perspective that we don't get all the time either. And I think that's what's important. That's definitely a good advantage here, pre-market prep, getting a lot of good perspectives on Todd Gordon. He is founder and director of investments at Inside Edge Capital, also the founder of tradinganalysis.com. Todd, we'll let you get back to your business. Hope you have a good day. Have a good week.
Hey, thanks for having me, guys. All the best this week.
All right, later, Todd.
See you guys.
Thanks, Todd.
Woo! A lot of info there.
He's always
Dennis,
full of info.
Looks like you were trading away back there.
No, just adjusting a little bit here because we obviously had a nice bounce here off those retail sales numbers here. I did sell into the bounce here to a certain extent, just hedging up more than anything. But it's tough. I mean, Todd made a lot of great points here, and I mean, and again, you know, this has been a really tricky market to call day to day. You know, we just don't know what the major next headline is going to be here. I mean, there's obvious setups like, you know, long Nvidia into a conference. That stuff still seems to work. But, you know, overall, it's been a very tricky market to call day to day. You know, there's this theory, random walk theory that, you know, I referenced earlier, where stocks, you know, the random walk theorists suggest that stock predictability is completely random and you cannot predict it whatsoever. And I would say you know, I don't believe in that theory whatsoever, obviously. But at certain points in time, the theory has relevance. And like day to day here, this has been a tricky market to call.
Dennis, I feel like a comment that Todd said that you would really like is he said, I'm really liking being a stock picker here. I mean, that's something that I think we've just been, you know, pounding the table on over the last few weeks. Christian, what were you going to add there?
I like how Todd has a couple different things that he uses, and he's definitely using a macro view and understanding what commodities and what currencies are doing, and then is basically using a bit of a screen to say, okay, what stocks do I want to basically look at? So I really like that approach. We haven't really given that much emphasis, which I was just going to kind of bring a little bit into the picture here of just what commodities have been doing. I'm just going to bring the charts back up here in copper because I think it's a very interesting story. And I asked Todd about the question about the dollar because I think currencies are important, what the dollar's been doing. But, you know, watching copper go up here too is usually a pretty good sign that, you know, as much as we've been hearing about in the U.S. that there's some softness, we just had retail sales came in that the top line came in a little bit lower. But usually when you see copper futures go up, there's some opportunities, and it speaks to what's going on globally in terms of growth. And usually when copper goes up, you know, I do know that there's a relationship here with copper and with emerging markets, which we've certainly seen China do very well. And, you know, I've been positioned in China. You know, still have a position on Alibaba. I've got some K-Web on here too, but I've been adding a couple little like side positions like JD.com. But also when you look at like two stocks that usually benefit from copper going up, we actually saw a pretty big option print in FCX last week. This was just a Friday afternoon, but you know, I think having a couple commodity names on your radar too. I'm watching for a break of 39.20. SCCO, which is Southern Copper, which sometimes actually trades better than FCX, also got an upgrade last week. Also looks kind of interesting here that it's bumping up against resistance here, but I'm watching right around like the 96, 97 level to see if there's a trade here in copper. One other name, and I want to see what your opinion is on these stocks too, Dennis, if this is something that you're open to, looking at some of these commodity names, but MP Materials also has been doing very well. And these are kind of also go in line with, these things will usually do a little bit better too. If there's more tariffs going on too, you might see a couple US names like an MP Materials outperform.
I think just looking, for that relative strength too, like even in a name like MP that didn't want to go down when the market was tanking, was holding up very well. When you see these names holding up very well and the market's tanking, and they're not like, like you can't talk like a staple or something like that, because those obviously go up sometimes when the market's going down. But stocks that are typically correlated with the overall market, not going down and then holding up. I mean, MP didn't sell off at all, hardly, really. It sold off a bit in late February, but, March has held up very well. It's the first one that starts to go. I mean, the chart looks fantastic on that. Would I buy dips on MP? Absolutely. I mean, the relative strength here has been excellent. And I mean, commodities themselves, some of these commodities are going to benefit from tariffs too. You've got to consider that as well. You get a new core, you get a US steel. I mean, copper, steel tariffs, are going to help the local producers there. So I think, some relative strength there is probably warranted. I mean, Nucor in itself, and I am long Nucor, kind of in a consolidation period, just kind of waiting and seeing here. But I mean, if we, obviously tariff talk can move these quickly. But I mean, some of these stocks are holding up probably because they actually benefit from tariffs.
Right, exactly. So yeah, again, just talking about the move in copper, I think that's very interesting, and it kind of takes away from like some of the news headlines that you're seeing.
Real quick, just wanted to give a quick preview for another economic data point that we're going to be getting at 10 a.m. today. It is, as far as I know, the most recent housing data that we have. It's the National Association of Home Builders Housing Market Index. Again, we're going to be getting that at 10 a.m. here, but just a quick preview in case anybody had any home builders on that they want to just keep in mind.
Look at the charts on the home builders for a second here, because this is so interesting that they are just not even participating whatsoever. So as much as Christian and I were just talking about relative strength in some of the commodity names, the relative weakness in the home builders is unbelievable. Lennar has not bounced at all. With the overall market, it's sitting right at the lows. KB Homes, right at the lows. Toll, just go through them all. They're all sitting at the lows. They did not bounce last week. What bounced last week was some of the tech names, but you are not seeing those home builder names. And let's think about why. The why is obvious. If there's going to be tariffs here, lumber is a huge import where you get a lot of lumber from Canada. And that is a huge expense, up to 30% of a home. Sometimes in cases it can even be higher than that, but it's usually 25 to 30% of a home's cost is wood. So, I mean, if you've got tariffs and tariff war continuing to escalate here, home builders are not the place to be. So if we get, relief where we say, hey, there looks like there's going to be a deal with Canada, maybe some of these stocks can start to grab, a bit. But right now, their value traps are until further notice, because one of their key inputs is probably going to go up significantly in price if these tariffs continue to escalate.
And you've got a double negative here, which is not equal positive. You've got the input cost.
Nice.
You've got input costs going up, and you also have lower demand. Consumers are starting to kind of, you could see it in the stocks. You could hear a couple analysts talking about it too. I mean, but look at the consumer discretionary ETF. So relative strength, relative weakness. You've got some support here, but again, to your point, we've seen growth stocks move up and get above their 5-period moving average, not consumer discretionary. And I'm cautious on, I'm underweight the consumer stocks, especially the consumer discretionary names and travel names. So we were talking a little bit about NCLH before the numbers, but I think that, going back to a lot of like how Dennis trades, but I would be selling the rip. If you get bounces in some of the travel names, I would be selling into that.
I think so too. And the other thing that we haven't even really mentioned, and the media is really not mentioning a lot either, is the fact that we're doing a lot of government jobs and cutting, if we're cutting spending across the board from a government perspective, that's fiscal policy, folks. That is the economy's been driven by fiscal policy for a long time. And I mean, if we're going to be cutting and making cuts, don't kid yourself. It's not a zero-sum game, folks, that you just all of a sudden, cut, they're talking about $1 trillion worth of spending, and that doesn't show up in the economy somewhere. It is a zero-sum game. It's not just like the money just goes up in thin air. Even if they're spending, $600,000 on sushi or something, which I don't know is real or not. I mean, that's still sushi. People were selling them. So, I mean, it's not like you just can cut $1 trillion from fiscal spending and all of a sudden, the economy is going to keep humming along. No, it doesn't work that way. That is, going to be something the economy is going to suffer from as well. So, I mean, there are a lot of things to think about here. I'm not saying it's bad. I'm not saying Doge is necessarily bad or anything like that, but it doesn't help the economy. So we got to think about, those things as well. I mean, obviously, we want to have governments that are efficient. So I think, some of the stuff that they're doing is probably very good, but there's going to be, it's not just going to be zero sum where the markets are just going to, applaud every single move that Doge is making.
Yeah, I mean, and that's why, like I've mentioned a couple of times, like I'm very curious to see what Powell's going to say on Wednesday, because that's the monetary side, and you bring up the point of fiscal, which is there's been a lot of stimulus. Like Janet Yellen was pumping liquidity into the market. You don't have that anymore, so it really kind of it emphasizes Powell more. Being more important now that there's no fiscal stimulus anymore. So I'm going to be very interested to hear what he says once we get to Wednesday about if he's going to be, again, I think we agree that he's not going to come out and say anything groundbreaking, but I want to hear him be a little bit more dovish in his commentary.
That's what the market wants for sure.
Yeah.
All right, folks, another good show here to start the week. Tomorrow at 8:35 a.m., we're going to be having on Ryan Dietrich, I think one of our chat's favorite guests here. Until then, good luck, everyone. Thanks for joining today. Hope we're getting your week started off on the right note here. We'll be back tomorrow with more pre-market prep. Later, everyone.